Give me a minute. Let me. Okay. Thanks everyone for being on time. And I apologize that we're supposed to start on time, but it's fine. Really excited to have you here. And of course, if you are at the right place to really be with us, we would love to interact with you at the highest level, because I think the whole conversation over here, right? Don't think that this is a presentation. We do not like to presenting. We are at the space where we want to share with you our journey and some of our clients' journey also. And we also want to take this time, right, to acknowledge you, because you can be anywhere. I mean, like even like for Ruth, right, is trying to rush your way back, right? But don't rush, okay? Just take your time also. Okay, and Corinne also. So probably you were rushing for your dinner. I hope you have a good indigestion system. I do not want you to rush your dinner. Most important, have a drink, because it will take probably 90 minutes. If Ruth, later when you're back at home, if you can on your video, that will be lovely, because at the end of the day, we really want to get to know you and interact. And the best way for us to really interact is where you participate with us, and then that's where the energy and the fun part will be like. Cool? Okay. But of course, this is a pure information session, and it's for education purpose. It's not intended to replace any advice that you're going to get from any financial advisors or consultants out there. And do take note that in the area of investment, there is always risk. Nothing is guaranteed also. Do take note. Okay, so everyone here, I think what we are really looking at today is really this big topic. Okay, so I don't know. How many of you are aware what's going to happen in the month of November? I think it's very obvious that I put it on the slide lah. Okay, but is it concerning to you or not? What do you all think? Yes or no? Like you don't care about it and all this. What do you all think? Don't care, you can do this. Or if you care about it, you can give me a thumbs up. Okay, I'm not here to drive the political energy, like the political ideology, like which party to vote. But it's more where if you are looking to invest at this current climate, right? How would it concern you if you are investing today? Okay, before we go into investing, right, let me explain the demographic or the environment that we are living in at this moment. Okay, like for example, this is what from this table you can see the rise and fall of the US dollar, which is the purchasing power of US dollar. Do you all notice something? That it is trending down. It is coming down for the last 100 years. It means what? 100 years ago, right? $100 was $100. Today, okay, as where we are today, $100 back then is only $2. Can you imagine your money being eaten up by this word called inflation? So what is inflation? Everyone know what is inflation? Inflation is like a bucket of water with a lot of holes in there. How does it feel? You know, every day, right, when we are trying to fill up our bucket, and yet the bucket is never filled. Do you all know why? Because of the holes, right? And the best part about this bucket, right, it is leaking 24/7. So how many of you here, right, have assets that are working for you 24/7? How many of you? Okay, if it's just pure money, right, then it is not an asset. And later I'm going to explain to you why money itself is not an asset. There are a better form of money, which is what we call by currency, okay, which I'm going to explain later. And think about it, not just your bucket cannot be filled consistently, okay, unless you have other ways or what we call by other streams of income, right, other than your employment income. Another bad news or probably good news for you is that instead of retiring at age 65, you're going to retire at, age 62. Recently, which was last year, the government increased our retirement age to 65. How many of you would like that? I hope not. Okay. The re-employment age also went up from 67 to 80 So can you share with me, by what age would you like to retire? Or even like how many years? By how many years would you like to retire? Can you comment in the chat box or even turn on your audio? By what age would you want to retire? Okay, just let me know. At least I know the audience that I'm speaking to, and I want to show you a path that is clear and is safe so that you can go there. Another problem that potentially be facing, half of the Singaporeans family in today's market, which is May 2020 article, is expected that their family is supposed to take care of them in retirement. Do you want that to happen to you? I hope not. I also hope not for everyone around me. Hey, you all haven't tell me by how many years or by what age? Okay, probably all not by what age then. All are ladies, right? In how many years time? Sorry, I'm being insensitive here. I apologize. Okay. In how many years time would you like to retire? Come. Okay, I will treat everyone as you are 25 years old or 21 years old. By how many years will you want to retire? Corey and Ruth. Wow, don't like that lah, because I insensitive, you all don't want to talk to me anymore. can give me some grace or some chance. Still no one want to tell me. Come tell me.
Corinne say in 30 years. I say never.
Or in 30 years. What about Ruth? Okay.
Sorry, I'm just reversing. I don't know, maybe if I can, maybe 55, I don't know.
Okay, 55, okay.
Yeah.
Okay, cool, thank you. I'm so sorry again, I forgotten that you're still driving. I apologize again. Okay, and I want to share more about the current dynamics also. If your money is still in the bank, what's going to happen is recently US start cutting interest rate in March, 15 March 2020, which is this year. It cut interest rate, right, which is the interbank rates all the way to zero to 0.25%. Okay, and what it causes, right, is basically the money that you put in the bank, right, is going to be not growing in terms of assets. Like, means it's not growing in value. Okay, it is also factual also. Why? On this day, which is 29th of April, CNN Business did interview with Jay Powell, which is the chairman of the monetary policy of United States. Okay, after he shift the interest rate to zero. Why actually the warning that he gave was very simple: to savers, drop dead. Is it shocking to you? Okay, this is the person that controls the interest rate, and he is telling you and me, you will be drop dead. Okay, so the paragraph over there actually said something like, with rates at zero for foreseeable future, people who hold on to cash isn't getting any return. That's unsatisfying to savings account holders. Do you think that is factual? That this is happening to us in Singapore? What do you all think? Do you all think that it's happening or not in Singapore? Okay, if I'm not aware of their saving rates, right, then I better tell you lah. Okay, it's part of our responsibility to tell you and show you how you can probably prevent such misfortune to you by purely being unaware. Okay, saving rates the highest, right, which is what Standard Chartered Bank is about 1%. It's only 20,000 of your money. If you have 20,000, probably you want to put there, but do take note. We are not affiliate to any banks. I'm just showing you the numbers. But the three local banks, right, is at very, very, very low rates, 0.05%. What it means is that if you put 10,000 in DBS, let's assume, after a year of interest that you potentially earn, right, you only get back about $5. How does that sound, everyone? Very bad, right? Okay. Probably cannot even take care of your parking needs or even a meal after 1 year. How does that sound? After putting them in one entire year, okay? Recently, the 3 local banks, they have this thing called high yield saving accounts. Do you all have that? How many of you have that? Okay, if you have that, also some news for you, whether bad or good, you go and make your own judgment. In April, 3 banks reduced the rates. You probably received the notice already. In June and July, in total, all the 3 banks have also reduced again. And I think in September, October, 2 other banks started cutting the high yield saving interest again. Okay, do take note. So it's likely the 3rd bank, which is what the local bank, is likely to reduce. So this is the trend moving forward. So why will there be such phenomenon? Very simple. A lot of the policy in terms of monetary policy, which is the money policy, right, in Singapore, right, follows after US. And based on a lot of research by us, right, the interest rate is likely to remain low for at least 3 to 5 years. Okay, you can just some information that we have done for you also. So imagine putting your money 3 years, 5 years there, and it's not growing. Okay, remember the leaking pill. So why am I telling you that your cash in the bank is trash? Do you think that it's trash? Okay, to our team, right? Cash is really not trash. Okay, why? Cash is still king. But a lot of people always like to quote this word. What cash is king, and all this, right? But the question is, how can it convert to king? So the answer is how to manage your cash during the crisis. Do you all see that at this moment we would potentially be the greatest crisis of our life? What do you all think? One of the greatest. Why? There is so many people losing jobs. There is so many jobs that are failing. Okay, if I'm going to ask you to invest today, what is the greatest fear in you? Can you share with me, ladies? Corinne and Ruth, if you have parked your car already, you can either text or just unmute yourself. Okay, what is the greatest fear? Come, can you share with me?
I think for me at this point of time is the uncertainty, like because the US election is coming, so like for me it will be, I will foresee like some volatility in the market. So like it's like after the election, don't know how the market is going to play out. So yeah, so that's why with cash at this point of time we also like have no idea where to actually allocate to. Yeah.
Thank you. What about Ruth? What about Ruth? So Corinne is talking about uncertainty, volatility at this moment and after US. Wow, okay, you are at the right place already because we will cater this for you. Sorry, we'll reply. So no worry, okay? Okay, please let me know because you know why I want to know this? Because end of the day, right, my team's role and our work, right, is not to just share with you all this knowledge, right? And then it doesn't serve you any purpose. Right? We want to be a part of your solution for you to be able to grow your wealth with not much risk in a sense, as low as possible. Okay, that's really our purpose over here. So I want to answer those questions together with you at this point. Good. And at the same time, right, you probably noticed that at this greatest crisis, yet CNBC reported, right, the pandemic led to one of the greatest wealth transfers in history. Right? Do you notice that when there is a very big crisis, right, we always say what? There's an opportunity and there's a danger. So-called your uncertainty, your volatility, right? That is what we are referring to. But yet, do you notice the news reported in June? Okay, and is it factually? Okay, so let's look at the numbers. Okay, the US billionaire wealth, right, have a surge during pandemic. So this is a March 18, 2020, their wealth. And immediately three months later, on the 17th of June, right, what happened that, do you notice the average growth of their wealth, right, is about 19.8%. Can everyone see that? The table on the right. Okay, individually, I mean, some of them make 50%, 11%, 6.6%, but the average about the total US billionaire wealth. Do you see the greatest wealth transfer, everyone? Do you want to be part of that wealth transfer? Right? And learn concepts and principles. Okay, the moment you learn these concepts, right, this will help you. Because think of it, principle is the guiding philosophy behind your investment. Can you all understand that? So next, if this is a graphic chart talking about the recovery and the recession year in S&P 500. What it is telling you that since 1957, there is about 8 crises. You'll notice that 6 of them, the following year, there is a recovery year. You'll notice this. So there are 2 crises, right? It didn't recover. 1969 and 2008. Can you see that? Okay, just look at the bar will do. No need to look at the number. So do you see that you are potentially a few more months to the recovery already, based on all these data that I'm showing you. Okay, so assuming the following year, 2021, we are not able to recover the losses of this year, right? The second question that I want to guide you through that discovery, right, is this question. The end of a bull run is the start of another bull run. What do I mean by that? So I'm going to show you the typical bull and bear market. Like how bad is a bear market, which is a downward market? Okay. How good is a good bull market? Means bull is going up. And how long or how short? Okay, so I'm going to have some colors on the screen. The average bull market means it's upward. Look at the color, blue color, is about 150%. The average bear market, which is downwards, is about 33%. Am I right to say that most of the time, the bull market recover itself based on these numbers? And the length of a bear market is about 365 days. Okay, by the way, it's not 1 year. It's about 1.5 years, because on Saturday and Sunday, the stock market isn't open. There's no trading activity on Sunday and Saturday. So it's about 1.5 years. So how many months are we in the crisis really? Potentially about 10 months. We are halfway into the crisis. Okay, and the average length of a bear market is about 1,700 days. So it's about how many years? 6, 7 years, around there. Do you see that? So this is the question that we answer. What do you think? The answer is yes or no, based on the historical performance of S&P 500 since 1957. Another thing, right, when it comes to investing, right, we do not want to use strategies that are not proven. Do you all understand that? That is why, right, the way or the principles that are going to help us to invest our money, right, it is backed by 120 years investment or investing principle. How do you feel if you invest with a method that has been around for the last 120 years? Okay, probably younger than us. Sorry, wrong word. Probably older than us. We are all at 21. So 21, we are like 105. Sorry, I'm going to slap by you already. So sorry about that. I'm very stressed now. Can you like unmute yourself and give me some some response? Okay, if you have watched the video, right? Do you all know who's Warren Buffett? What's the 2 rules of Warren Buffett? Can you all share with me what are the 2 rules? What's the first rule, especially? Never to lose money, right? And the rule number 2 is never forget rule number 1. How will you feel if the way we invest your money, right, have these two principles on your left side, which is my left, and on my right side? How will you feel? Means these are the guiding principle while we are investing our money with you. Okay, but of course, if you do not want to do it with us, it's totally fine. You need to have these two guiding principle always with you from today onwards. Can you promise me this? Okay, can we make a pact? Means that every time when it comes to investment, the number one rule you tell your consultant, you tell anyone that you are talking to, never lose money. Can you do this or not? And then you tell them the next criteria. Number two, never forget rule number one. Can you find me something that is like that? Okay? Or a principle. And the reason why we are doing this, right? I mean, on every single week, like 2 sessions, very regularly, right? It's not because we have nothing better to do. Okay? The reason why we are doing this, we wanted to look for people who are afraid. Thank you, Ruth, for switching on your video. Appreciate it. Okay, yes, go ahead. Don't worry, you all go ahead. Enjoy. Just make sure that you all can lie on the bed also, but don't sleep again. I think you need to I cannot hear you. Probably you need to connect your audio. Okay, you all can just relax, okay? Can? I think I can hear something from you.
Hear it now?
Yep.
Okay, loud and clear. I use my headphone. Can you also hear me now?
Can.
Okay, great. Thank you.
Can just be comfortable, everyone. Don't need to use headphone. We can hear you loud and clear. No worry.
Thanks.
Okay, we are not rushing somewhere. Anyway, we are at home already. You're not rushing home, right?
No. Rushed home already.
Thank you for rushing home. Okay, that very appreciate. Why are we doing this every single week, right? It's purely because, right, there is so many recently, right, there are people trading, losing their money a lot, and they do not just lose money, okay? They lose their precious life. And it's very painful for us. Why? I have a daughter. Imagine my daughter go through this. I think I will also jump down together with her, right? So to me, right, I felt that I wanted, or even my team feel that we wanted to impact the younger one or everyone that we can reach out to. So on every single week, right, we want to do this, right? So this is the reason. And if you can help us to spread the word, we will really not just appreciate you. I mean, we will really love you for that, because it's the life that we are concerned. It's not so much of the money that you lose, okay? And the guy that lost the money, right, he is age 20 years old, haven't turned 21. So he woke up in the morning, he saw 700,000 negative balance in his Robinhood account, a very popular trading account, millennium account in US. So he woke up and the next moment he jumped down. Maybe not so immediately. But he didn't realize because he was trading a leverage account. So trading comes with leverage, means it's like the risk is going to be higher. The actual amount that he lost was about 30,000. Okay, you can go and read. And we really feel that for myself, because I used to be a trader myself. I'm currently trading on my own. It is really where they don't understand the instrument, right? They bring a lot of heartache and pain. So I hope that you can help us spread the word. And who are we looking for? We are looking for or partnering with professionals and parents who are in the real world, right, and wants to retire in 8 to 10 years time. If this is the objective that you're trying to achieve with us, we would love to have that conversation with you. Okay, so many of times my wife always asks me, Alvan, why do you want to put like who live in the real world? Who doesn't live in the real world? Right? Are we real? I'm pretty sure we are real, right? Okay, let me give you some context. Many of you probably think that retirement means what? You need what? $10 million in your own account. 2 million, 1 million. I don't know how many millions you want. But can I tell you, right? You don't need millions, right, to retire. You just need a cash flow of maybe 1,000, 2,000, 3,000, up to 10,000 to be able to retire. And retirement doesn't mean you see an airplane and start buying airplanes, or you see a Lambo, right, start buying Lamborghini, right? That's not retirement. That's like super ultra wealthy. I'm not getting you there. Okay, I'm also not there, by the way. If I'm there, I won't be here. Let's be realistic. Okay, am I real to you? My job here is to show you a path, right, that you can probably retire yourself with maybe 2,000 to 5,000. Would that be good if my team and myself can achieve this for you in the next 8 to 10 years? I hope so. Okay, you all can unmute or you can text. It's fine. Okay, I will really want to meet you all on a face-to-face, because I think we have been working from home too often. Okay, let's grab a coffee together. So let me show you something. If you are, this is like an illustration purpose. If you are at age 35, and let's look at the 8%, very conservative kind of return, annualized return, and you put in every month or 1 year is about 12,000 annually for 10 years. Okay, 10 years. Your retirement at age 45 with a passive income of 1,000 a month. Do you think that is achievable? Yes. Congratulations, you are able to have that. But of course, many of you will tell me, Alvan, 1,000, no, not enough. But remember, this 1,000 will go all the way to your age 99, you know. Means what? Total withdrawal ever since age 45 to 99, 660,000. But your total contribution is about 120,000. Okay, so let me ask you, do you want to contribute 180,000 120,000 potentially give you a withdrawal of 600,000, or would you prefer to save 600,000? Choose your path. Which one will you choose? A or B? 120,000 or 600,000 by saving?
By saving 120,000 A.
Okay, cool. I will choose that. Potentially, you might think, for me, probably 120,000 a bit low lah. Make sense? Can go higher ma. But the illustration also tells you though, the remaining amount is about 2 million. You can, I don't know. I mean, I don't know whether you all have kids or married or not. But if this money, right, it may not be something for legacy. It could be something for charity, right? Something that I'm excited. My team, most of them comprises of a lady, and they want to empower the lady. They want to make sure that they can help them. There's so much work that we can do, and that's why we want to really work with you and partner with you throughout that journey. Because many of you may feel that finance is not my cup, investment is not my cup. Doesn't matter. We are here to add value to you, to be part of your solution, not to be a part of your problem. Another scenario, age 35, likewise 8%, put in another 12,000 a year, which is 1,000 a month for 20 years. Retire at 55. I think someone say 55. I personally like the number 5 also. Okay, Ruth probably will understand. Okay, with a retirement income of 3,000 a month. I also like the number 3, by the way. Okay, I like the number. I don't mind telling you my what's that? 门牌. What is it called? 门牌? Unit number. Okay, I cannot tell you all. Later you all will find me. My unit number is 0333.
Oh.
Okay, this is my journey in terms of numbers. Okay, but I don't believe in the number lah. There is other meaning behind it. Okay, for those who understand, they will understand. For those who don't understand, they will never understand. Hope that one day they will understand. And the total contribution is about 240,000. Hi Anna. Anna, can you hear me? If you can hear me, you can give me a thumbs up. If you can help me, you can switch on your video also so that I can see you. Okay, don't be too shy. I should be the one that is shy. Why? Because I'm the one that is speaking to you. Yes, I can hear you. Awesome. Okay, total withdrawal for you from 55 to 99 is about 1.6 million. Okay, remaining amount about 3.9. Again, remember illustration purpose. Okay, but what I'm telling you, right, is that a lot of people don't understand why we need to have a passive income, or what we call by another source of income. In a sense, you think of yourself personally. Are you more tired, more drained each day as you go to work? You are not. Hey, you are not human. I'm not talking to alien here.
Tired. Yeah.
You know, but yet we still work. So you see, why am I saying this is that we really don't really need to work so hard. With a 3,000 passive or another stream of income, you will probably relax a bit more. Am I right? Will it feel a bit more relaxed, everyone? Just a 3,000 extra for you. Or even 1,000. I want you to live in the real world. You do not need to live. You do not need to buy a Continental car. You probably do not even need a car today. You know why? Because you cannot travel much. Even you have a plane today, you also cannot move. So the $1 million questions today that my team and myself is going to going to help you in this discovering this journey, right? It's called invest now and invest where. Okay, would that be good? Okay, but before I share this, right, more in context, right, can I share a bit about my journey as an investor? Okay, yeah, I see one person not here, the rest.
Yes.
Thank you. So why I say live in the real world? Because I'm a very common Singaporean. Okay, I'm living through my income, through the investments through my portfolio during this crisis. And you do not need to start with a huge sum of capital and risk, because I started my journey way like about 20 years ago for me to get to where I am today. And the principles that I'm going to share with you are similar principles that Warren Buffett used for himself. Am I right to say that the way Warren Buffett invests today, you cannot do it one? Because he invests in a way where he buy up companies. Like he buy up the whole company. Can you use the current strategy? Cannot. How many of you have millions of dollars? Then immediately go and buy a DBS. That's the kind of investment that Warren Buffett do. So that is why I want to bring you back to the past when Warren Buffett was young. Right? Because when he was young, do you think that Warren Buffett is a billionaire? It's not. Probably not even a millionaire. Am I right to say that? So a lot of investors today, they always think that, oh, I need to follow Warren Buffett. But they don't understand how to follow because they don't even understand the problem that they are facing. And this is the clarity that I'm going to give you today. Would that be a good thing if you leave today with this thing with you? Okay. If it's no good, then I think you can end the call and go home and sleep. Sorry, you're at home already. If not, this is something that I want to share with you. Okay. And my story, I used to work in the corporate companies as a risk analyst, as a credit risk analyst. But before this journey, when I became a corporate risk analyst, right, I used to join Air Force as a senior technician. So I'm very common in a sense, not very smart in a way. Probably I'm not the smartest among my group, but I do it more smart, do it in a way that is, how to say, with a bit more wisdom. I don't think I'm smart. I feel that I'm wise. There's a reason for it also. And this is my family. I really thank God in a sense where Angel was born on 1st of January. So we managed to celebrate her 7 years birthday. And we have a very big party before the safe distancing. So we have like 30 kids at the, I think Tua Payoh Safra Club, and all go and run and bang themselves, thankfully. Okay, if not, I'm going to, as a father, I cannot celebrate her birthday. Okay. And the story behind me is very simple. When I was signed on at age, after poly, right? At age 26, I actually got married. 7 years later, at age 33, my wife and myself paid off our property. And 2 years later, I told my wife that I want to go and do what I want to do. Okay, like live my passion, helping people, right? So that's why what I did was simple. I went to a trading career and a coach journey full time for a couple of years. I probably coached about 200 to 300 traders, mostly around the world in Singapore. The company is still around. There's a certain reason why I left there because of the risk that is too high. But the problem I felt for them is that no matter how I teach them, I always feel that not all of them going to succeed. Do you agree with me? The reason why most investors and traders, they go and learn a program, right, that they cannot succeed, right, it's not because the strategy is no good. It's the temperament of the person is no good. Can you follow? Can you believe that after attending my program used to be a 3 months program, means every week I meet them. Still they feel like, can you imagine learning how to grow your money using a 3-day program? Impossible, please, don't let them, they are not comment, but they just not being honest with you. Okay, that's why I decided that no, I cannot do this anymore. I want to go to a deeper relationship with my people. I actually go into get my MAS license. So everyone know what is MAS license? Okay, the Monetary Authority of Singapore. Okay, when I get my licensing, there's a accountability, everyone. Do you understand accountability? There's contractual, there's license. And beginning of the year, I was the top consultant for a company of 100 consultants. Okay, and that's why I want to share this message with you. And how, I mean, of course, that picture is purely me sharing in my company how I became the #1 consultant in the company. Okay, nothing to be proud of. Okay, for me, it's very simple. If you think that I'm the person or my team is the team for you, we want to have that conversation. If you don't think so, at any point of time in this webinar, feel free to go. Okay, go and rest. Okay, I believe in resting yourself. And of course, during this journey, during circuit breaker, we have been doing a lot of webinar. So one of the webinar I did, there was about 100 participants. I actually shared Warren Buffett's principle. So this is the best quote that you probably need to remember. Our favorite holding period is forever. The reason why is it forever is, let me ask you, if you have an additional source of income, how long will you that give you money like 3,000 a month? How long will you like that money to keep coming to you? Forever? Probably for generations to come, right? And generation to come, right? So this is the principle of the wealth, right? They keep rolling their money. If you do not think so, the richest people, not just the most wealthy people on earth, their family lineage, right, could be hundreds of years. Okay, 100, 200, 300, like the Rothschild, the Rockefellers, those are like, or JP Morgan, you know, if you go and Google, or like Walmart family, their wealth is like super, but it's many, many years. Okay, and this year I actually started my YouTube channel. If you can subscribe, I'll please help me, support me in our work. And this channel was never created in the sense that I want to be a YouTuber. No lah. It's purely because I know that I'm at 40 at this stage, and I don't know when I will go. And if I go, I want to make sure that whatever knowledge that I have today, right, I can pass down to Angel. Okay, it's like you know, Chinese, they have this like old man saying, right? Better write it down first, you know, in case one day next year Alvan becomes senile, so better put it there first. So this is my work for her. Okay, and I'm going to share this very important conversation with one young man and one old man, which is Warren Buffett. The other one is what? Jeff Bezos, which is Amazon, the richest man on earth. So this conversation is very unique. It's like behind the scene, right? Do you want to hear how the rich people talk now? I'm pretty sure, right? Right. Wow. So I managed to find this. Okay. So the journalist actually asked, what's the best advice Warren Buffett gave you? Okay, it's documented. It says, I think, recently. So Jeff actually said, I asked Warren Buffett, your investment thesis is so simple. Do you see a double emphasis? You are the second richest guy in the world back then. It is so simple. Do you see another double emphasis? Can you all hear this or not? It's not that simple, ladies. So simple. Okay. Why doesn't everyone just copy you? Why? Buffett say, because nobody wants to get rich slow lah. Huh? Can I give you some context to what Warren Buffett says is slow? Then you make your own judgment, whether is it slow or steady. For the last 30 years, ever since 1987, okay, until recently in 2019, the red box over there, do you see that Warren Buffett's annualized return is about 14.9%, better than S&P 500, means better than the broad market. Do you think that is slow or steady? So his context of slow is not slow, everyone. Okay, and this is his track record for the last 30 years. Okay, so let me ask you one question. If I can show you something that delivers such result, can you just copy? I hope so. Okay, you want to do it with us, good. If you don't want to do it with us, it's okay. But please, okay, go and really think of this thing. Okay, I care for you enough to tell you this. So I'm going to share with you. Year to date, 1st January 2020 until this is what October 12th. All of them. The screenshot is from Bloomberg. Okay, so it's the third-party software, and Bloomberg is the most reputable company in the world already. I cannot hack it. Okay, it's like your CNA in Singapore, in a sense. And the other one is what? Year to date 40%, year to date 51%. So is it good or no good? Come, everyone, tell me, good or no good? So okay, rules say good. I can read from your lips. Okay, but do unmute yourself. I want to hear everyone's voice because I'm very lonely here. Okay, all thumbs up. Fantastic. Thank you. Okay, can I tell you something? It's no good. Okay, you're shocked, right? You know why? I'm no longer interested to look for return. I want you to look at this word called sustainable return, consistent return. Means on a year-to-year basis, Alvan, this one achievable or not? You know what I mean? You see, the amateur investors, when I show 50%, they were like, wow, so like what, jaw drop already. They jaw drop to the floor. But this is not right. Don't go into all this wow advice. Okay, go for the prudent approach. What do I mean by the prudent approach, right? So it's consistent returns, right, that we are looking at. So look at the yellow box over there at the bottom. 3 years annualized return. So for the last 3 years, right, 3 years, average return is about 16%. Does it make you feel better? Then the second one, okay, I better color it. If not, you all don't know which one I'm referring. Sorry about it. 3 years, 16% over here. 3 years annualized return about 13%. And 3 years return annualized about 29%. Means for the last 3 years, this asset has been growing 29%. Will it make you feel better? And of course, 5 years, 26%. Better? Okay, so from today onwards, please look for such consistent or sustainable returns. Cool? Promise, Sorry if I sound like your father. Because I'm a father. Okay? Because I care for you. Okay, so these are some testimonial from the work that we have done with our clients. Kelvin actually said that we have extensive knowledge of the market, strong financial wealth and portfolio management. Yongkin over here said that he himself, which is Alvan, invests on the fund. He showed me what he invested in and then showed me the fund's profits generated. Why we do that is purely for accountability. Okay, if someone is going to guide you in investment, right, then rule number one, right, is that are you investing together with me? If they are not showing you this, can you walk away? Okay, and the best is call a police. Can you help me eliminate the scumbags in this planet Earth? Sorry for using very strong words, because you know why? During this entire month, right, I met a lot of people that lost a lot of money, and it's not like 1,000 to 2,000. It's like 50,000 and 100,000. Do you think that I'm angry or not? And some actually told me, Alvan, if I could have met you 1 month earlier, I said, I also want, but I can't. And then it was pouring to me because it's like their 棺材本, which is their coffin money, all gone already. They are in their 40s and in their 50s, 100,000. Crazy, right? And both of them lose their job during COVID-19. I also want to cry with them, but I comfort them. I say, it's okay. It's okay. So Kelvin over here, the text message, we during this period, for the last 8 months, we generated 88%. Yongkin also did a video testimonial for me. Okay, 8 minutes. He actually said Alvan is an investor and not just a consultant. Do not look for any consultant. Look for investors and work with them. I put myself onto a consultant path is why? Because I want to be bounded to you. We want to have that accountability, contractual agreement, right? I cannot do anything illegal. I mean, I can, but it means jail term and fine. I have a daughter of 7. I think I prefer to be free in Singapore road than in the jail itself. You understand that? Okay. So some more of the records over here, just to show you the results of them: 66%, 18%, 25, 32%. Okay, the returns are slightly varies because of the different risk appetite they have. Am I right to say that? Everyone is not going to be the same. I just want to show you that. It's not like, wow, Alvan, are you going to risky asset? No, the number one job that when you come to us, never tell me or ask us, what are you investing? Ask me, how would you invest my money with the lowest risk? How would you? Because if you can invest in a way that makes you sleep well, right, and very sound, right, you are investing properly really. That is what I want to do for you. Okay. And 43%, 52%, and 30%. Okay, I know it's like this I keep repeating. Okay. And also, most important, I don't just show you my client's portfolio, I show you my own portfolio. How about that? So currently, right, my total capital, when I started investing after the crisis, about 120,000. At one time I whacked, no whack lah. This is not all my money. If not, my wife will roam, my head will not be here lah, will be on the floor already. You probably won't see me lah. Okay, so I'm thankful that I managed to get a return of 55,000. Okay, I want to round up lah for this because I like 5. Okay, the value is about 180,000 at this moment. So I make an ROI of 40%. So what do you think? Can any of your consultants that you are working with have such a passive income for themselves? If they don't have, you think about where you get your advice can. But again, today I'm not giving you advice can, but I'm just asking you. Okay, so upfront I show you what I can deliver first. Okay. Honestly, some of my clients tell me, Alvan, you make 55,000 already, why are you still working? Okay, because it's not about money for me. That's why in the beginning I say I don't need you to invest. Okay, I need you to invest properly. If you want to have that conversation, do have that conversation with us. Good. Okay, no force one. When it's forced, then the results are bad. Okay. So again, if you can help me screenshot this or take a picture, probably later, right, you can put on your social media, help us do a bit of sharing can. Yeah, no obligation, but we really want your help. And then after this, I'm going to go straight into the content or into the objective that we are trying to achieve today. Okay, Ken? Okay, while I grab a drink. Because yesterday, Alyssa never drink water, so I better remind myself. So she talked for about, 2 hours and never drink. Then at night, tell me sore throat. I say, good for you lah. It's like that one. I used to be like that. Okay, but it's okay. Okay, so this is this is our team. So on the left is Alyssa, myself, Joanne, and Jean, all 4 of us. Whatever title you want to give us, okay, I leave it to you. So on the right is all our hashtag. If you can hashtag that, we will really appreciate that. Okay, or at least if you feel that this webinar is something that later on, right, it serves you and probably can add value to your friends, please let them know. Help us do a shout out in a sense. Okay, so let's dive straight into why the disconnection between economy and stock market. Do you all notice there's a disconnection? Economy is where all the jobs and the businesses are. Stock market is all the, like your SGX, S&P 500, which is the top 500 companies in the US. Do you notice that everyone is losing job and income, and yet the stock market is still going up higher and higher? Why is that so? Okay, this is one of the reasons. There's this thing called quantitative easing and repo. What it means is, look at the diagram on the right. Central bank creates money. Once they create money, right, what they do is they go into the financial markets to buy bonds. The intention is to reduce interest rate, allow businesses and individuals to start borrowing money. Because why they need them to borrow money? Because most of our wealth, right, is created through debt. Okay, which what we want to share with you is 90% of money, right, is debt, or what we call by credit. Like for example, if you're going to buy a HDB today, do you buy in full price or you take a loan? Full cash or you take a loan? Typically, people will take a loan of 90% for HDB if you're a first-time home buyer. Means what? $500,000 property, right? You only put 10,000. Okay, my math correct? No, 50,000. Okay, 450,000 are borrowed from the HDB itself or from the bank. Do you see that by using 50,000, you actually bought a 500,000 asset? So the spending that you have done on that point is $500,000. So that's how wealth is created. But let me ask you, is it good to have a debt? No. If you own a house today, right, it is not an asset. It is a home, by the way. Because why? If you sell it, where will you live? On the street, is it? Don't do that, okay? Please don't do that. Okay? So it is not an asset. It's a home. It is never an asset. It is a home. Because you treat it as an asset, it will make you feel like it is like your office. Especially now the worst is work from home. It is a home. Make it a home. Number 5, when we start borrowing, like businesses and individuals, what's going to happen? People are going to spend money. Why? When I can borrow money as a business owner, right, I'm going to hire people, right? When I hire people means what? My people will start spending and spend on another business itself. Then they can start hiring again and again. So that is why the objective of QE and repurchasing, right, is to boost the economy. Okay, so if you ever hear about this term QE, right, you'll realize that the market is likely to go up again. And is it factual or not? So let me show you what happened at the last financial crisis, 2008 and 09. So look at the circle over there. The blue line represent the QE program. Means what? The creation of monetary policy. Okay, printing of money. The red line represent the S&P 500, which is the top 500 companies in US. Do you realize every time they print, stock market goes up? Every time they print, over here, stock market go up again. You see that? They actually printed three times. And stock market just go up each time in that sense. And guess what? Do you want to realize that there was a QE recently? Can anyone guess which month? Okay, if you are not aware, it's fine. It's in March. That is why the stock market went up after March and April. You probably do not know this. Okay, so that is why a lot of the principles are not really hidden. It's just that you are not seeking it. If you are not seeking it, you will never find it, right, everyone. And I also want to tell you there will potentially be an opportunity for you, depending if you think that it's an opportunity. There is another QE program is coming. Okay, they unveil a stimulus plan again, but haven't get approved at the US Congress side. So this is a September article. So it probably will be out probably I'm not sure whether is it before the election or after the election, but doesn't matter. Okay, because once it's out, market is just going to go up again. Why? For the last 4 QE, the reaction is go up again. So what do you think? Go up or come down? I don't know. But based on what we are looking at, is most likely to. Okay. So next, we're going to go straight into it, right? But do take note. We actually did a recording, right? Which give you a bit more comprehensive about this. Okay, I think for you, if this is the first time you hear this, right, I really want to send this copy to you. If you like this, the full copy, right, do let us know. We will send it to you. Okay, even if you do not want to meet us, it's fine. We will still love to meet you. Don't feel like the more you get from me, the more you need to meet me. By the way, I also don't know where you live. I cannot hunt you down. Cool. But purely, I'm going to go straight into the most essential point. Okay. So anyone here thinks that Biden or Trump will win, or want who to win? Okay. The honest question, the honest answer to you doesn't matter. I'm going to show you why. Okay, so 4 or 5 things that I'm going to cover here. Right? The average stock market returns during a 4-year presidential term. Okay, US presidential term is every 4 years, and maximum 2 terms, so max 8 years. Trump is on the first year, which is the first term, first 4 years. Sorry about that. Historically, which party has better performance during stock market? Democrats or Republican? Democrats are the blue flag. Republicans are the red flag. Okay. How the stock market performed under past president since 1957. Okay, give you some numbers also. And then the 4th one, how the stock market can help to predict the outcome of a presidential election. Okay, for this one, I actually put it in the video. Okay, and some of them also. But the most important is the last point, the 3 big mistakes investors make and how to overcome them. So I'm going to go through that. Okay, if you want more detail, then obviously go to the video. It's about 22 minutes. I'm going to like do it very quick, like breeze through for you. Average stock market returns during the first 4-year presidential term. Look at the red color table or the bar charts over there. Do you notice something? The first 2 years of a 4-year term is likely to is lower. But you notice that the average return ever since 1789, close to 300 years of market data. This is a number. What do you all think? After the presidential election, market is likely to go higher or lower. And then 3rd and 4th year, right, it gets higher. Okay, this is the average. Of course, Democrats ever since 1945, their returns annually, right, based on stock market is about 9.7, Republican is about 6.7. Okay, so CNN business, not by us. So these are research credible one. But think of it, you need to see beyond the numbers. What do I mean by that? So show you all the president ever since 1953 also. Do you see all the red and blue bars? So the red one represents Republican. Do take note. Just remember, Republican, red. Cool? Okay, so do you notice that there is 3 negative bars over there? That, right, on the left side, Nixon, Bush 1 and Bush 2. But you must know why there was negative. So for Nixon's case, right, there was a Vietnam War. And there was a watershed scandal. So there was a scandal due to Nixon's wrongdoing. So that is why the market sort of went down for him for that term. Okay, and Bush, which is the Bush Jr. in a sense, for his 2 terms, right, was the first term he has 911. Think of it, 2 buildings collapsed. Is it very bad? And the end of his term, he went to a global financial crisis, 2008. What do you think? He was actually doing very well until the financial crisis crashed him. Okay, so this is the context. It doesn't mean red color or blue color they are going to increase. Behind the data also need to remember. Am I right to say that every president is different, unique, and the situation is also unique. right? The dynamic is there. And I can tell you, nobody can predict one. If someone can bring out the crystal ball and give you, again, if you have a gun, shoot the person. If not, call police and catch. Okay, too bad I'm not in America. If I'm in America, probably I start shooting a lot of people already. They don't like that. I'm very graceful, I know. I'm not like that. I just want to make you all feel relaxed because you are not talking to me. Okay, the three mistake is very simple. You are too worried which party will win. Okay, got spooked by the primary season volatility. Okay, so Corinne, this is for you. Okay. Then of course the third one is investors try to time the market around politics. Okay, let's go to the first one. So you look at this table over here, right? Ever since before 1938, do you see that every year, right, the color keep changing? Right, means the party keep switching. Do you notice that the market still go what, up or down? Up, right? So it's at 1,000 ever before 1938 to probably 2019. Your 1,000 amount become 10 million, ladies. This is factual. It's from this. The source is there. Okay, Morningstar, not from us. Okay, we get from credible sources. Okay. One of the reasons why stock market will continue to go up, either party, right? Let me ask you, whether you are a Democrat or a Republican, is the person American? If you are American, would you want the stock market to collapse? No. It's like, I'm a Singaporean, okay? But the most important thing is you need to remember, US is a very mature economy. They are used to two strong parties switching hand every election term. If something like this happened to Singapore, right, the market will go crazy. You know why? 50 years PAP. Okay, 50 over years. Don't fault me. Okay, I'm not predicting any. Then the next term become another party. Will it collapse the Singapore market? It will. But in US, it's different. For the last, how many years, X amount of years, they are switching around. They are very mature investors, really. It's only because we live in a very small country. We do not know. We do not know the investors over there. Okay? That's why a lot of investors in Singapore, right, they don't have the temperament to invest around the world because they don't understand. Okay, and investment is not about strategy, it's about temperament. If you want to have the right temperament, you are able to sleep well. Okay, so don't allow election prediction. I don't even bother about prediction. Why? Because both of them are Americans, unless one of them is a Russian. I don't know which one. Okay, could be Joe Biden because of Hunter Biden. Could be Trump because the last election, someone say Russia helped him or Putin helped him. So I don't know, but cannot be lah. Okay. So the results have little impact on long-term returns. Understand? Long-term returns. Next, volatility of primary season. So means before the election day, 3rd November. Market tends to go up and down, very volatile. You are all correct. But the savvy investor actually look at what? We actually think that volatility is expected during such election seasons, and yet we do not fear it. Do you know why? We see it as an opportunity to get in. And it's factual also. When you see me personally, right? September, the stock market actually went down. Around September, I actually added money into the portfolio, into my own portfolio. And I can show you factually. If not, you can go to my Facebook. I actually added. Because I'm very frustrated with people just pundit. You know pundits, right? They like to say market go up and all this. I say, don't talk so much. Show me the money. Okay? Show me the money. Don't tell me where the market will go up or down. Just show me how much you put the money in the market. Okay, I'm frustrated. Okay, that is why I'm really frustrated with. Never mind. Okay, but you help me with my work, Ken. With our work. Okay, and then phase 3. Now, investors time the market around politics. Okay, we do time the market, but what we do, right, is we want to switch your assets around. And it's factually also. Before election, investors tend to be cautious. That's why market actually came down. They actually moved from equity fund to money market funds. Means what? Hold a bit of cash. But the money market fund technically is not cash. It's actually safer assets, or what we call by safe haven. Okay, you can meet us. We will explain to you what are the multiple safe havens in the world. Hi, Angel. Have fun. Yeah, I'm pretty sure because I'm working and she's at MBS with my in-laws, my father and mother-in-law. Okay, and then after election, they move back to equity again. Do you see? That's the work that we do. When the market is more risky, then we are going to do some switching for you so that it's less risky. And when the market is ready to go again, we're going to switch it back again. So that is our job. Okay, it's not some, don't know lah, you all may think that it's a saving plan or some, no, it's not saving, it's investment. The moment anything talks about saving, is like 0.05%. That's my impression on saving plan. Very low, peanut. Actually, it's worse than peanut. For 10,000, only $5. I don't know what you can buy. Really, I really don't know what you can buy, honestly. Okay. Then the part two of this, it is telling you, don't miss out on the best day. What do I mean by that? If you miss out, okay, this is an entire period ever since 2010 until 2019, for the last 10 years. Okay, likewise from Standard & Poor's, the source is there. If you have invested 10,000 on 1st of January 2010 until 31st December 2019, okay, if you invested throughout the entire period, do you notice that the amount actually grew to the highest point? It's the most amount in how to say grow to. And if you miss 10 best day, do you see that the loss of your value in your portfolio is about 33%? Okay, because everyone want to time the market, but what I'm telling you is don't time the market, stay invested. Think of Warren Buffett. He has been investing very long already. That is why his money continue to compound. Imagine he stopped somewhere, let's say after he make $1 billion. Do you know that he might not be the second richest man on earth? Guess what? Guess at which age Warren Buffett have $1 billion? Anyone? You all can put it in the text box. Or you can unmute yourself, it's fine. Oops. Sorry?
Was it about 50?
Around there? Good. About 50 plus. So imagine at 50 plus, he say, hey, I think it's a very good idea. I withdraw everything and put in cash. He might not become 80 billion. You all notice? If he would have stopped at 50 plus, at 80 plus, right, he will not be at 80 billion. It would have stopped. So this is what I'm trying to tell you. Invest is a forever thing. Okay, so next. Okay, so stick to a long-term objective investment strategy instead of trying to time the market around election, because it's impossible to do that. Anyone tell you that they can do that is crazy. Okay, because why? Even during COVID period, right? Warren Buffett in his first, I think second quarter or first quarter, in his AGM, annual general meeting, he actually tell the market participant, don't predict the news. That was like his first word. Okay, and he keeps telling people this, and he had been investing ever since age 11, and this year he just turned 90. Okay, so there's a lot of wisdom into it. Don't predict. If you can predict, then you are technically God. Okay, wait, God don't predict, God create. Okay, so don't predict. And so I don't want to recap. How you can protect your money is very simple. Don't allow election prediction and outcomes to influence investment decision purely because of the race they are in. And also understand the economy, understand the developed market. Okay, very little impact to our long-term goals. Likewise, expect volatility. So learn this, because why? Every 4 years when there's volatility, you just need to know what to do. Okay, that is why I always tell my investor, when during good times, right, you prepare for bad time. During bad time, right, that's where you take opportunity. Remember, I showed you the richest people on earth, right, during the last 3 months, grew their wealth by 20%. You ask yourself, do you live that 3 years? The 3 months? Same one. We have time, right? But do you get that 20%? I got my 40%. I don't know about you. Okay, so you ask this question. Don't let time leave by and then keep doing the things you are doing. But a lot of people out there are creating wealth already. I always tell my investors, is wealth, there's a wealth transfer. Are you attracting it or is it walking away from you? To attract it, you need the principle, right? You need to stop the leaking hole in the pail. If you don't know how to stop it, then it is walking away from you. You have to keep working. Stick to a long-term investment strategy. Instead of trying to time the market, okay, don't need to time one. Okay, stay fully invested or make regular money investment did better than those who stay invested in cash in election years. And these are factual. I just showed you all the numbers really, like a 100-year kind of data. Okay, but even though you are still very scared, right? Still scared, right? Are you all still scared? After I tell you all this, cannot, Alvan, so very risky, cannot, I don't want to listen to you. Do you all feel that way? Okay, I have something to offer. Okay, that's why our job, do not just want you to invest in whatever manner we want you, right? It's also to reduce your risk. So this is another asset. That's why we use gold. Remember, I told you, right? Your money is actually not money. What do I mean by that? Because think of it, if money that you are having in your wallet now can be printed, right? Is it real money? There's like unlimited supply. Is it real money, everyone? It's not real money, no. It's paper money, no. Do you know that US, during 1-2 months, they printed $3 trillion? We combine work 24 hours for the next 100 years, maybe also cannot make 3 trillion. Do you know they took how long to print 3 trillion? 2 months. Better wake up. Okay, and the printing of money means what? Your money, right, will be drained faster. Okay, and it's like on the 24/7, it's the worst. That's why gold is a very good asset. Why? It's the only currency, right, that has lasted throughout history. Means ever since barter trade has been taken away, right? You all know barter trade, right? I suppose they have to have an instrument like a medium of exchange. So they actually use gold or precious metal. And gold is very good. Why? Highly liquid, yet scarce resources. Means can you print gold? What if you can you tell me? Okay, and it is not a liability. Why? The moment you own gold, right, it is yours to keep. But do you notice if you own, okay, I don't want to use Sing dollar, US dollar. Imagine the country go bankrupt. All your US dollar is gone. Do you realize that? Do you have control or not? No. Why? The control is on the chairperson. Okay, that's why gold is likely to maintain or even appreciate in value, and it acts as a safe haven. It's a better safe haven asset during market risk-off period. Okay, and it's not just we say we're talking about the learning from the best, modeling after the best investors on earth. But we try to look for investors that are alive. Okay, when you read books, like Great Investor, right? Try to not read those that are dead one. No point one. You know why? Already dead really. Their principle might be there, but they are not telling you how can you prepare yourself for the future. Right? So we want to look for real investors or great investors at this point of time. What are the things that they are doing? That is also our job. You have no interest in it, it's fine. I love it one. Okay, I really enjoy reading. Okay, that's not just my job. I can tell you it's my passion. Why I say that it's my passion? During my teenage years, right, I do nothing. After my mom introduced teletext to me, because it help her do investment at age of 12. I started reading investment material content. And I actually asked my mom, can you subscribe StarHub CNBC and Bloomberg to me. So that every day I go home after school, I just watch the news. But honestly speaking, I don't understand. Man. Back then, even worse. Don't even have internet. I go to the library. Imagine 13, 12 years old boy watching this show. My mom also don't know, like, wow, this one go crazy already. But my mom was the one that started my journey, not me. Because she is more like a Chinese educated. So she need me to help her with her tally text. So that's why I need to help her. And of course, when she make money, I have treats. So think about it. When you are in a teenager, your mom give you good stuff, do that. Right? And that's why I immerse myself into that topic. Okay? And the best is when my mom lost money, right? My dad will scold her. And I hate it. Sorry to use the very strong word. I hate my dad for scolding my mom. So my job is very simple. I want to help my mom. So that's why, right? Do not just look at people who are dead. Look at people who are alive. So this is something. So this investor is called Ray Dalio, Bridgewater Associate founder. So he believes it will be both risk reducing and return enhancing to consider adding gold to your portfolio. And it's not just him, you know. Even with us, last year we actually start adding this asset already. Okay, if you have a chance, go to my LinkedIn. My testimonial are there. Go to our LinkedIn. Our testimonial are there. Some of my clients are even before the crisis. Go and ask them factually. Did Alvan show you the gold equity asset? Okay, check with them. Don't check with me. You know why? You check with me, you think I'm a salesperson. So my client is my best asset. Okay. Why? Because I can lie. They cannot. Because I have an interest to lie to you. Fair enough? Fair enough? Fair, am I real to you? I live in a very, very real world. Trust me. Okay? You go and ask them. That's why you think about it. Why will my client do video testimonial for me? Together live with you. 7 and 8 videos, you know. So this is one of the assets. The gold equity, I showed you year to date about 40% already. We actually shared with them last year. Okay, but we cover the actual asset because it's not giving you any recommendation. So this is our approach. Okay, because if I show you the asset, you start buying, then you lose money. I cannot. My license will have a lot of problem because you might not know your risk appetite. Again, remember, hear my word, risk appetite. Okay, a risk appetite that you are able to sleep and then do the things that you want. So again, during a crisis, QE went up 3 times. Look at the red line. The blue line is the gold price. You'll notice that it also goes up, right? So it's also factual. The last crisis, this crisis happened again. And something that I want to surprise you with. If Warren Buffett invests in something, will you all go ahead and invest or not? We are. So Warren Buffett start investing in gold equity already. August 15. You are not too late. Don't wait until August 15, 2021. One year later. Okay. But we have been doing this last year. Factually, I got documents to prove one. But again, I tell you, we are not smarter than Warren Buffett. We are not. Because we are studying the market and so that we can bring your risk down. So we know what are the assets. So that's our job. Whether you want to execute it is up to you. We will not impose you, but our job is to be alongside with you to get what you want, which is multiple streams of income, potentially one more. So Warren Buffett invested in a company called Barrick Gold. It's also one of the companies that we invest way before him, by the way. And think of it, when Warren Buffett invests, how long will he be investing this company? Can you type in the group chat? Or just unmute yourself. See whether you listen to what I'm sharing with you. Okay, there's a wait. For life, wow, steady, Ruth, thank you. Okay, this is my only job. You know why? If you don't invest forever, you're very stressed, right? Why? You every time want to time the market. What few months? Warren Buffett would like to invest forever. Maybe you never get my question, it's fine. So correct, he has invested for the last few months, but his investment time horizon, right, is forever. Okay, his favorite holding period. Okay, apologize if I wasn't clear. So let me ask you last question. At this point, are you feeling better investing? If you're going to invest in such a framework, so you can tell me in the group chat, investing now. Okay, maybe I launch a poll, even like 2 of you, but I'll still launch a poll because I want to surprise you with something. Okay, so choose out of that 3. Invest now, wait, or invest yesterday. Which one will you choose? Wow, no one say invest yesterday. Really? If I can give you this option, think of it. Okay. Thankfully, you all never. Okay, so I share the result. Both of you say invest now. Okay, very good. I'm very happy. You know why I'm very happy? I'm very happy because both of you live in the real world like me also. Steady? Okay. Those people want to invest yesterday depend on what is their mindset lah. Okay, they can keep dreaming. Okay, at least you are in the real world. But also not too bad if sometimes can dream a bit, right? Okay. So for us, we do not just want you to invest now. We also want you to wait also. What do I mean by wait? Why not both? Remember, the end of a bull run is the start of another bull run, right? There will be assets in the short to medium term, right? It's likely to go up, which is what we call buying gold equity. Another one, long term, we are looking for equity, but we are not looking for any kind of equity. Probably in your mind, if I ask you to buy a equity, right, what kind of companies will you buy? Can you put inside the group chat? Technology, yeah. Any more? What about other forms of companies? Healthcare? Oh, okay. Okay, any more? Oh, hey, this group quite different. Very good. I like. Means you're on the right track. Any more? Don't have it, yeah. Okay. People always try to tell us property and banks. So you think of it, banks are interest very low, right? And their business is earn interest. So interest very low. Do you think that banks can make money anymore? Very hard, because the purpose of their job is to charge you high interest or low interest. Low is what you want, high is what they want. So think about it. Okay? So exactly, but it is not just purely these two. Why? The tactical approach, right, is I want to tell you in terms of sector, right, there is about 11 sectors in the world that we can invest. Okay? Think of it. Am I right to say that at certain business cycle, right, certain business will succeed and certain business will fail? It's like during this COVID, no one know that cruise liner industry, right, will collapse, right? Or the airline. When was the last crisis that an airline actually, because of a COVID-19, they stop operating? Don't have. Right? That's why our job is to figure out things for you at the fastest pace. While you are working 24 hours, when the market just keep moving, right? And then you don't know what's happening, and then the market collapse with you. How about that? Think of it. All the video testimonial that my client did is all after COVID-19. Right? You know why? When everyone is burning, losing money, they actually look at their portfolio. Wow, Alvan, make a lot. You go and ask them. Think of it. It's all recent video testimonial. Why? Because I outperform them. Or we outperform them. That's why they use their heart and give it to me. I mean, not punch me, relax. Wrong phrase of words. Okay, so there are 11 sectors. Our job not just look at sectors, we are also looking at geographic places that you can invest, like the different country. Okay, not just investing in Singapore. Okay, if you are only investing in Singapore, I do take note. Singapore, no doubt, is very connected around the world. Because of COVID, we are no longer connected to the world really. Understand? Human traffic is not coming to Singapore, neither is it going out. So when human traffic is not moving around, money doesn't flow, everyone. When money doesn't flow, do you think that the country can thrive? Can be quite challenging, by the way. So our approach is tactical, looking at the business cycle, and also discipline. Okay, why need to be disciplined? Because it has to be a very long-term approach and less emotional. So let me ask you, when you invest, I make it emotional for you. Is it good decision-making or bad decision-making? Bad, right? We have to be a structured step-by-step process, a thoughtful process to reduce your risk. And likewise, these two assets are what we've shown you in the beginning, by the way, okay, just to show you that what we have been doing for our client. Okay, it's all factual. So again, going to show you the Dow Jones Index of US for the last 1896. Okay, another 120 years. So this is the 120 years data that I'm showing you. Do you notice it's just one straight, so-called not straight line, but the market moves in zigzag. You'll notice that. It's still generally going up, what we call by trending upwards. Okay. Why is it trending upwards? Is very simple. When the wealthy people notice that their money is diminishing, depreciating, they just go into the equity market. Okay? And that is why Warren Buffett keeps saying again and again, don't predict the market or don't predict the news. So all those small lines over here, right, represent every news event. If you look at the bottom right, it's about 121 news events. And this is 120 years. So am I right to say every year there's a news event? Right? All the election, all the wars, all the whatever that you can think of, the 6-day war, just there in the middle of the screen, multiple events. But yet the market still naturally go up. There's a reason one. Okay? But a lot of you, most people probably don't see it. Why? Because based on Warren Buffett, right, he said the stock market is a device for transferring money from impatient to patient. So if you are impatient today, right, are you going to make money or not? No, less likely. If you are patient like him, you are going to make money because it's just transferring to you over time. And think of it, he invested since 11. If he would have stopped investing at age 50 plus, he would not have become 80 billion. Imagine. It's like after investing for 69 years, 1 year 1 billion. How does that sound? Wait. Context. I cannot do also lah. Okay. My purpose to show you this is to purely tell you holding period forever. Okay, focus on the passive income, another source, 1,000, 2,000, 3,000, 5,000, 10,000, or something like what I have done. One this year 55,000. But can I be honest with you? Do you think that amount is just the amount that I have? I cannot be showing you everything, because you are not my wife, right? Everyone. I only can show you what I can show, Fair enough. So next time, even if a consultant tell you, hey, I am consultant, then you tell them, how much you put? Like that, okay? Put 2 liters one, put a lot one can try. I'm not saying me, other people. But if you think that we are the right team, I would love to have that conversation with you. Okay, so tech, healthcare is one of the sectors that we can look at. Okay. So it's like, now this is so this data again from JP Morgan Asset Management. Okay, this is below. Okay, why I'm showing you this is very simple. It's about the market timing of retail investor. Okay, means people want to time the market, right? If you still today in your mind still tell me, Alvan, I want to time the market, I think I failed already. Then I'm going to show you this data. Okay, at 1995. So if you look at this blue circle over here, it represents the highest trading volume. Means a lot of people start buying. And the orange line represents the S&P 500. Do you see it was at the peak? So most investors want to do this. You know what they like to do? Buy low, sell high, right? But do you know what they end up doing? Buy high, sell low. This is what is showing you they what? They buy, right? But is it buy high? And then when you want to sell, right, they sell at the lowest. And then the market start going up again already. Okay, that is what retail investor is facing because they want to time the market. So that is why I keep telling my clients, never buy low, sell high. Why? Because you will end up buying high and selling low. Okay? So don't buy low, sell high, okay? Just stay invested. Remember I showed you the US election before 1938 until 2019, if it's 1,000, it becomes 10 million. Okay, that is what you need to do. And I'm going to tell you another way, right, to reduce your risk of losses. Potentially close to zero, but you need to decide for yourself what kind of risk you want to take. Most people don't know or don't understand risk, right? It's because they sort of cannot see the risk or quantify it. Right? Like for example, people always say, take risk, but they were not going to tell you how much, right? If I can show you a way that can tell you how much you are risking your money, would that be good? So there are three types of investors over here. Okay, the first type, invest only 1 year. Means they just want to put in 1st of January, 31st December, take out the money. The chances of you losing a period of losses, do you notice? 27%. The second group, okay, but before that, right, how does it sound? If within 100 days, 27 days you are losing money. Sound good or no good? No good, right? You want to invest like that? Wow, you no response. Don't please, tolong. Okay, so this one I take out, you all don't be like that. If you come to me, still tell me you want to invest 1 year, I straight away don't want to talk to you. Okay, don't talk about investment already. Just chit chat, then go home, sleep already. Okay. If you choose 5 years investment, means I only can invest 5 years. Hello, Marcus. The period of losses, right? 13%. 13% better. But again, think of it for yourself. If 100 days, 13 days you can potentially be losing. How does it make you feel? Can sleep or not for that 13 days? Maybe can, right? But can, please don't call us also, okay? You know, in case, because we're going to manage your money for the next 5 years, got 1 year you start calling me, means we all cannot sleep already. So this is not the way to invest your money. Hope you also understand this, right? Also don't do this, please. The last one is the better one. 15-year time horizon means at least invest for 15 years. Okay, remember I also show you 8 to 10 years the numbers. So 15 years will be the better one. Why? Period of losses. Tell me how many years, everyone? Close to zero, eh? So how? Close to zero better or 13% losing money or 27% losing money better? Close to zero, eh? Okay, but I cannot tell you that is zero, because there is also risk involved. But I'm showing you a data, right? Ever since 1926, 90 years of history. If you invest for a 15-year block, it's close to zero. So make a choice, okay? Okay, so I'm sort of done. I'm going to conclude and probably go into a Q&A, and then I will share a bit more about how our partnership will work. Would that be okay? So just to conclude everything, the timeless investing principles, right, is don't predict the market. Don't even bother. And time in the market is not timing the market, okay? Means staying invested. Start young and long term also. Means start young, okay? If today this is the youngest, then just start it. Just start that journey and then stay invested long term. That's it. Okay. And clear off all bad debts. Because the moment you can clear off all the bad debts, right, your another stream of income, right, will be able to take care of you. Understand? And I tell you why this is so important to me. At age 20, my mom actually tell me this thing before I turned 21. Oh, told me, sorry. Okay. Sorry for my grammar, very bad. Okay. Because I'm more not so good, as you all can see. Oh, during my primary school days, all my results are red in color in a sense, and then at age 20, right, my mom, because I'm going to become 21, right, my mom told me that, because I'm the eldest son, my mom told me that, Pinter, don't need to worry about me. I paid off my property already when I'm 20 lah. So because of this, I actually start asking her, like, how do you manage to do this? So she keep telling me that you need to like clear off this bad debt. So that's why when I got married, before even I got married, right, I actually told my girlfriend back then, which is now my wife, I said, hey, I really want to like retire very early one. You don't tell me you want to buy condominium, buy whatever, you know. Don't tell me you want a grand wedding. I believe in marriage. Not that I do not believe in wedding. I believe in marriage, everyone. Okay? Don't get the word wrong. If you plan for the wrong thing, your ending in life is bad. Okay? Like marriage, right? Don't plan it in a way that there is a back door. Okay, this is my value to you. Okay, it's a family value for me. Don't plan for a wedding, plan for your marriage. Okay, and that is why within 7 years, right, both of us pay off our property. Okay, 33, technically I retired. Technically I do not need to work today, but it's not really for the money anymore. I mean, think of it in that sense. But okay lah, no one don't mind having a bit more money, right? Like even at, you know, like some of my friends are telling me, hey, you make so much, why you never buy a car? I think for what? And most of my cars are like fully paid off. I don't have any debt. So this is my principle for you. I do not just tell you, I live by it. When I even buy my property, I don't even have renovation debt. Because this is my principle. My mom tell me, Pinter, don't take debts, okay? Other than housing, you know, I don't have like X amount of thousands, right? I need to take loan one, right? But as much as I can, try not to take debt, credit card debts and etc. Don't have that. Okay, for those one, like Corinne, you are young, you're going to meet a boyfriend, please make sure they do not have any credit card debt. Okay, when you get to marry them, about to get married, go and do a credit bureau check report on them. Make sure their credit rating is the highest. I'm going to share this with my daughter. Okay, make sure they have no debt and their credit rating is higher. You know, when I print out my debt, my credit rating, my credit rating is higher than my wife. Can learn this, Corinne, please. I don't know how old are you, but you look young. Do this, do this, please. You know, I meet people who tell me the husband married them with 100,000 of the credit card debt. I also cannot tell the person to divorce the husband, right? But the only thing I can tell you today is go and do a credit bureau report, $8 only. If you cannot, go and find me, I pay for you also can. Steady, go steady, okay? Please do this. This is like life principle. You don't do this, your marriage is gone. But you do this, your life is still intact. Okay, anything that I share with you today doesn't bother. Corinne, this one is the most important. Can write down. This one is the uncle teach you how to find boyfriend. Not boyfriend, find husband, okay? Okay, so this is also what I'm going to tell my daughter. Okay, imagine now I'm at home sharing this with her. So one day I'm going to record this. Please help me promote, okay? Not promote, share around. Do me a favor. Okay, invest in business that you can understand. The business that I personally and my team invest, right? We understand it. Okay, is something that we can relate to. You also probably can relate to. We just have to explain to you, show it to you, you understand really. Okay, hedge your risk through assets allocation, which is like gold equity, safe haven assets, etc., etc. Okay, do not invest in a single company because there is no diversification when you are having one company. Do you hear what I say? Okay, never mind. Okay, so for me, right, I want to end off with this picture for you. You know why? You know, Alvan and family, right, I wasn't very well to do. I want to end this story, right, to really help even myself to liberate my own pain. When I was young, at age of 5, right, I actually, potentially I will be a tragic life in a sense. You know why? My dad nearly threw one of my brother out of the window. I have a pair of sibling, younger brother. So they were about turning 1, I'm like 5 years old. My mom cannot work. My dad was having odd job because he was a sailor. So he was undergoing a lot of pressure. So because of this, right, I make it my life purpose, right, to make sure that I become very wealthy. You know why? Not because I want to have money, because I want to take revenge with my dad. Sorry. So this is something that I think even Joanne haven't heard this. Okay, but I'm sharing this with her. Yeah, Joanne is my business partner. This is very painful because recently one of my coach tell me to share this more so that I can offload the pain. Okay, but today I tell you I no longer hate my dad. I love my dad. Why? Because I also understand when he had my brother back then, he was also a father. Excuse me. He just became a father. So for you who are young, if you hate your father, if you hate your mother, don't do that. Because they also just became a father. I came to read Revelation in the sense when Angel became 3, age of 3. I asked her, guess how old is Daddy? So now you know why number 3 is so important to me. He said, Daddy, you are just 3 years old. I said, yes. It shocked my mind. And that really changed my whole mindset. And I learned to forgive my dad. I was actually an abused son. Out of 3, I am the most rebellious probably because I hated him. I really hate him. Why? Because it's like, why can't you produce or provide more for me? Because every time he say he cannot, I will remind myself I can do it and I will do it much better than you. But that drove me to the wall. Don't do that. For you who are young, don't do that. I'm still young, by the way. Okay, I want to live until 120. So I'm like 1/3 only. Okay, that's my dream. Okay. Sorry, apologize. If I do this outside, I think I cannot continue. That's why in webinar, I can do this. Okay. So to me, it's where I'm doing this not to just like tell people how to invest. I want to share this story so that people will know that Alvan is not where Alvan is today without all the pain and the struggles that I have. And I do not want to see any family go through what I have went through. And I can tell you, until today, I still feel the pain that my dad did to me. It is a serious one. Because guys don't like to be vulnerable. But my friend tell me, you need to come out of it. If you don't, you cannot heal yourself. Because it is choked up in your life for the last 40 years. Or 35 lah, -5, sorry. Then 5 years again. Okay. So this year, why I do this also because it's my 21 years of life with my wife. It's like 3-7. 3 complete. So I tell myself that I need to come out of this. If not, it will be very difficult for me to move on my life. Okay, I need to come out. So sorry. So to me, like, this is really my purpose. I want to make sure that less people will feel like what I feel. And I also want to let people who had this feeling of mine, right, to know that their father just turned a dad when they just grew up. Sorry.
Yes, Angel. Ask Angel for a tissue, please.
No, I got tissue.
Yeah.
My wife is inside the room. Okay, so today whether you invest or not, I care less. I want to tell you, share more love. Okay, be part of this journey. And I want to, okay, because I feel that I want families to be self-sustainable. And by being self-sustainable, ladies, don't go into very bad debts. Be prudent about your money. Grow it. Be wise. Choose the right people. Choose the right team to work with you. Not me, it's fine one. It's okay. Like, hey, this crybaby, it's fine. Okay, it's okay. But I am very real to you lah. That's why I put the word. I live in a real world. I live in a real world that Alvans have problem. But thankfully, by the grace of God, that I am okay.
Yeah, I think it's
Any
not.
Q&A?
Yeah, I think it's not just whether is it protecting your wealth or in any relationship. I think no matter what today, like we are going to our like more intimacy relationship with our future better half, or we are going into a relationship with friends, or we are going into a relationship with even like us, like whether be it today we are on a business partner relationship or a consultant relationship, right? I think the most important thing is like you really have to find somebody that you can trust, and you really have to find somebody that you can click with. I think that's that is very important, especially I think for ladies lah. I'm not too sure about how other ladies think, but for me, right, how I actually come into this industry, how I actually started this work, right? I think end of the day, right, is really my gut feeling. When I meet first time I meet Alvan, right? Then first time I meet our boss, right? Before I even get into the company, right? For me, it's like, hey, I'm just coming here for a quick interview. I'm not going to step into this industry. But I think only about 1 hour into meeting them, then straight away, even before I get out from the company, I just tell them, I say, okay, like come, let's do it. Let's try to work this out. How can we partner each other, and then how can we work alongside with each other? And I'm pretty glad that that time I trusted my gut feeling, in terms of like trusting this group of people to really open up this relationship and building this relationship with them lah. So yeah, I think maintaining a very positive and maintaining I think it's hard lah. Like today when we are talking about serving not just our family but also serving our clients, right? It's really very a lot into like client intimacy. We really want our clients to really feel that we are there for them, and we are human too. Yes. So that's why like just like Alvan, he shared about his portfolio, right? Actually, most of the time I will tell my clients as well. I say if today, right, you were to lose money, I will definitely let you know that I actually lose more than you because I invested more than what you invested. So well, while we are protecting our own wealth, right? Actually, we are also protecting our clients' wealth. So this is why when we are doing this webinar week after week since the COVID, right? We have impacted more than 100 over people, and this is what we wanted to do as well. It's very simple things that we come into this industry, right? We wanted to change a lot of things, but we do what we can, but we really try to impact one life at a time. So that's why today, right? Suppose actually there's about 4 to 5% sign up, right? But turn out that's a few people didn't turn up. Even it's like just 2 of you girls, right? We would think that hey, these things will still carry on, because no matter what today, whether is it 1% of 50%, we will still do the same thing. Yeah, so I think this one is like when Alvan today, I didn't expect him to have this emotional part so bad lah. And it seriously is also the first time that I actually heard about it. But I'm glad he let it out. And then yeah, we are all human. We all have emotions. And but when it comes to investment, that is the exact part that we wanted to take this away from everybody, because emotion, right, is psychologically we cannot take it one. We have to let go. So why not letting go this emotional part and let it go for some other people to help you to handle? I think this is why Alvan today, when he's letting go, right, this is also something that he actually let go this emotional part of him, right? For us to listen a bit, handle, we might not be able to handle for him, but at least he actually put it out. So same thing, when it comes to investment, emotional is very critical. In fact, most of the time, right, the market fluctuates because of human emotion cannot take it. So put this away, and then basically then you will see actually investment is not very scary anymore. But most important thing is the strategy, how we actually do it, how we invest today. What are the strategies that we put in, right, to actually help us to reduce the risk, and then to take care of what is the best ROI that we can get when we reduce all these risks for our clients. Okay, yeah. So yeah. So now Q&A, back to our Q&A today.
I apologize for that also, everyone. But I think I need to be a bit selfish. I need to like air out in me. One reason was mainly was because my mom went through an operation recently. And then the first day when I picked her to bring to the hospital, she reminded me that this is actually my second operation. The first operation is because of you. It was cesarean. So I suddenly, like, the whole entire month, I am very, I'm going internally like a roller coaster lah, if you understand. Giving you some context over here also. Yeah, because I brought my mom too much pain when I born, and
How many hours you stay inside?
I don't dare to ask her, by the way.
I tell my son, I say 22 freaking hours. So next time you better love me more than your dad.
Yeah. Then the thing is that my brothers, they are a pair of twins. Imagine what a lady will go through, what my mom will need to go through, and natural, you know. So
okay.
So the three sons better take care of my mom.
Yes. Okay. But like Corinne and Ruth, like, do you all have any questions throughout just now? What do you all think? Like, any things in mind that you all can ask now actually? Anything or no? Yes, Ruth.
Can you hear me?
Yes, loud and clear.
Yeah. No, I just want to say, like, thanks just for rest of you for this. I mean, I'm definitely keen on making more of finding out the strategy.
Yep. Okay.
Long term.
For the, I mean, probably, I think everyone is a bit tired. We can arrange a separate session, one-to-one, probably see you face-to-face. At least we want to see a crying baby.
It's okay.
And actually, the most important thing is also because everybody's risk appetites are different.
Yeah.
So
correct.
and we also it also depends on, like, end of the day, what's your end goal? How much you really wanted to see, or what is the purpose of you doing this investment?
Yeah.
Then from there, right, we will be able to really answer, like, for example, like, what type of strategies that we can help based on your situation, based on the needs that you want, or based on the wants that you want. Then from there, it's really more P&C discussions up to that point. Yeah.
But
how about Corinne?
Corinne?
Thank you very much for sharing, Alvan. So learn a lot from you and investment principles, and so really appreciate it. So one thing that I'm curious is that understand that you're talking about, like, every month putting like certain amount of money, like dollar cost averaging. But may I know, like on the platform itself, is there any product or investment style that is more like a lump sum investment?
Okay, a reason why lump sum is a bit tricky, right, is where, you see, when the approach why people think of lump sum, is they just want to put one time, right? But what if this time when you put in is the wrong time?
Yeah.
And then you're trying to time the market, right? Okay, remember, when we're talking about a regular type of investment, right, we are not talking about like a lot of money. It's as low as like $10 a day, Sing dollar, by the way. I mean, remember, start young. I mean, I'm pretty sure Warren Buffett, when he start at age 11, it's not like 1 million a day. Age 11, how much money he has?
Yeah.
You can all read it. So $10 a day, 1 year about 3,006. But again, it's not so much of, the objective here is not trying to ask you how much can you invest. That's not the objective.
Yeah.
While you are investing, like, how are you investing? That's the most important. How? It's the how. Assuming if
Okay. Thank
so,
you. Ruth.
assuming. Bye bye, Ruth.
Oh, okay. So sorry, because
Okay.
I have one more, yeah, at 9:30.
Okay.
Yeah,
Okay. Maybe Corinne's your question. I will
I will
share.
answer. Yeah.
Yeah. We will continue. But let me another 5 minutes. Will that be okay?
or slightly less. So sorry, I need to log into another. Yeah. But it's okay. Yeah. Please
Okay.
continue.
Could be quite fast one.
Okay, sure.
So mainly what I want to share is like how the partnership works. Right? Is that we want to build a systematic blueprint with you. Right, based on a free Singaporean CPF framework. No, it's not. Okay, later I'll explain to you what's the framework. Right? It's actually tailor-made to your short-term, medium-term, and long-term objective. On top of that, we want to do a yearly accountability portfolio review with you. Not just a portfolio review. It's about 6 to 9 months. Why it has to be accountability, right? Is so that you know whether you are on track or not for the objective you set for us to achieve with you. Imagine, I mean, like this morning I talked to one client. I asked, have you invested? Yes. When was the last time? 5 years. Then I'm like, huh? Okay. When was the last time you see 5 years ago? Then the next question I asked her, how often you look at your bank account? Oh, very often. I say, huh? Bank account probably don't lose money. Your investment will lose money. Then you're not looking at it, means what? You don't dare to look at it or what? You see the mindset with investors today? So if you're having investments in your portfolio, you are not looking at it, better. Even you tell me, I have a consultant, cannot, it's still your money. You have to be responsible for action. What if your consultant are not responsible? I mean, am I right to say that? So you have to define what is responsibility. So later I can explain. So of course we're going to educate you because we got our channels, right? Something that I do personally, or we do personally for you, is an exclusive clients letter. Okay, I'm going to skip this. So it's a YouTube. You know, I have a YouTube channel, right? But I have unlisted content in there. You don't see one, like the market updates and all this. You know why? Imagine one day I have thousands of clients. How to meet them day by day? I'll die really. So I use technology. I do not just invest in technology. I use technology. Okay, so it's like very regularly already. You know, like look at this. Because this is the earlier screenshot like January. There's a market update. 2 weeks later, February, March. Remember, QE was in March and April, right? That's why I do a 20-over-minute video for my clients. Imagine you do not know and how to go through this journey. And I also shared with you, right? There's a US election. I also done a 20 minutes video for them also before the election. So this is what accountability, 6 to 9 months, but actively we are guiding you. Okay, so of course we recently doing this investment principles review. We also send to our clients. So future we have new content webinar we also will send to you. Talk about COVID also, in a sense. So that's the engagement that we have with you. We are, we want you to be part of our community. Okay, and I want you not just put money with me. I want you to be savvy investor also. It doesn't make my work easier. You may think that it make my work easier. No, you're actually helping us to help other people. Because I'm pretty sure you have friends who told you, right? Like, hey, I just got con 10,000 or 50,000. I don't know. Then you are the people that you can help them. So I want to make you savvy so that our purpose is bigger. It's not about Alvan and team making money, X amount of money. I technically don't care anymore. I mean, I care lah. If today I got $0 in the bank account, then of course I worry lah, but I'm not. Okay, I care less about how much money I make. Okay, I'm not a survivor. So I really want everyone here to contact us. Of course, Ruth, if you need to go, I'm done. I mean, we will reach out to you, okay, Ruth?
Yeah, sorry, I got to go. So it's
okay,
9:50.
Corinne, yes,
Yeah.
no problem.
Yeah, catch up.
Yeah, Corinne, I'll follow up with you.
Yeah, sure.
Thank you.
Thanks to each of you. Thanks for your time. Yeah,
No
appreciate it.
problem. Thank you.
Thank you. Bye-bye. Thanks.
Bye.